Welcome to Cold Brew Finance's U.S. End-of-Week Deep Dive, covering market moves in indexes, sectors, stocks, and global markets. The week ending Friday, May 15th, 2026, brought significant developments. Kicking things off, I'm Max Profit. In the latest market action, the S&P 500 index rose slightly, posting a close of 7,408.49, up by 9.57 points, reaching a new all-time high. In contrast, the Dow 30 index and the Nasdaq Composite index, despite strong trends, experienced minor declines, closing at 49,526.18 and 26,225.14 respectively. While the S&P 500 advanced, market breadth revealed more weekly decliners than gainers. Both Dow 30 and Nasdaq faced similar downward pressures with more declines. The broad challenge was shared by the S&P 400 Midcap and Russell 2000, which also reported more weekly decliners. For total and daily returns, the S&P 500 showed a monthly uptick. However, the Dow 30 and Nasdaq experienced slight overall weekly retreats. Standout monthly growth was seen in the Nasdaq. The Russell 2000 and Midcap faced larger weekly slides. Long-term analysis shows significant growth trends. Over 10 years, the S&P 500 and Nasdaq saw impressive annual returns. Despite a weekly decline, the Russell 2000 posted notable annual growth, affirming long-term positive market outlooks.
Checking out best and worst performing equities, I'm Penny Stock. HCW Biologics surged this week by closing at 1.22, up 0.89, a remarkable 271.1% increase. Furthermore, it showed a mixed positive trend and broke out from 38 days of flat movement. Continuing with outstanding performances, 3 health partners ended at 11.29, increasing by 7.74, up 218%. It marked a new one-year higher close and is in the midst of a strong positive trend, climbing consecutive for 5 weeks. Despite recent surges, HCW Biologics has negative long-term returns, with a 10-year total return absent. It has, however, seen a breakout after flat movement, demonstrating a mixed positive trend. Cisco Systems achieved noteworthy growth, closing at 118.21, up 21.64, rising 22.4%. This marks the 6th consecutive week of increase, setting a new all-time high amidst a very strong positive trend. Let's highlight outstanding returns, as CrowdStrike closed at 594.8, climbing by 66.31, up 12.5%. It set an all-time high, experiencing strong upward volatility, maintaining its strong positive trend for the 5th week. Examining long-term returns, Cisco Systems shows progress with a 3-year annual rate of return of 35.86%. Achieving a new all-time high close, Cisco maintains strength with a very strong positive trend. Haoxi Health Technology hit a new all-time low, closing at 0.2, plummeting by 0.70, down 96.9%. The consistent downward volatility and a relentless negative trend mark an unfortunate trajectory with 3 consecutive weeks of decline. Completing our view on declines, Elong Power Holding ended at 0.95, down by 5.48, marking an 85.2% drop. Not only does it record an all-time low, but it has also endured 54 days of flat movement. In this slide, we highlight some of the significant declines. Haoxi Health Technology led the way with an extreme 96.9% drop, recording a new all-time lower close of 0.2. It's currently in a very strong negative trend with 3 consecutive weeks closing down, coupled with some downward volatility. In today's review, we see Charles River Laboratories International facing a significant decline of 15%, to close at 150.85. The stock shows a strong negative trend and some downward volatility. It's a tough week for big-cap stocks. Continuing our focus on big caps, LKQ hit a new one-year lower close of 24.61, facing a very strong negative trend. Meanwhile, Intel, despite a close down, has secured a new all-time higher close at 108.77 with a very strong positive trend. Looking at annual returns, Intel shows impressive three-year returns of 265%. Conversely, Constellation Energy and LKQ are on strong negative trends, each facing declining total returns over various timeframes.
And now on to U.S. sector performance. The energy sector surged with a close of 907.43, up 57.39 points, marking a significant 6.7% weekly gain. It displayed a very strong positive trend. Meanwhile, the consumer defensive sector rose modestly by 1.2%, closing at 961.67, also showcasing a strong positive trend with some upward volatility. The technology sector hit a new all-time high at 6,651.33, closing up for the seventh consecutive week, emphasizing its very strong positive trajectory. The energy sector saw broad support with 112 weekly advances against 34 declines, highlighting its dominance. In contrast, the consumer defensive sector had a mixed week with 61 advances and 128 declines. Technology advanced strongly with 202 advances, while healthcare and financial services showed more declines, indicating potential challenges in those sectors. Total returns underscore the energy sector's strength, boasting a weekly return of 6.7%, while technology's momentum translated into a 9.8% month-to-date gain. Notably, healthcare faced over a 6% decline year-to-date, despite its recent uptick, and financial services struggled, reflecting a downward trend with moderate total returns. Long-term returns show technology and financial services outpacing others over a decade, with the technology sector boasting an impressive annual rate of return exceeding 25%. Comparatively, energy and consumer defensive offer stable growth, while healthcare reflects moderate long-term gains, balancing mixed trends observed in recent weeks.
In the energy sector, some top stocks are showing impressive movements. Occidental Petroleum closed at 59.62, increasing by 6.59, indicating a very strong positive trend. Meanwhile, Targa Resources reached a new all-time high close at 271.99, gaining 23.87 with strong upward volatility. Targa Resources leads the weekly returns with a 9.6% gain, marking a new high. Occidental Petroleum posted a strong weekly return of 12.4%, showing robust momentum despite a slight month-to-date dip. ExxonMobil maintains a strong positive trend with a 9.2% lift. Reviewing the long-term gains, Targa Resources shines with a stellar 564% ARR over 3 years. APA boasts a significant 119% one-year return, reflecting ongoing strength in this sector. The trends indicate positive growth across these stocks, painting a bullish picture for energy investments.
Among the worst performers, the consumer cyclical sector fell by 3%, ending at 1,936.7. Despite this decline, it continues to show a strong positive trend. The real estate sector also dropped 2.5% to close at 274.55, with a very strong positive trend. Market breadth within the worst-performing sectors shows notable declines in one-day metrics, with the consumer cyclical having 297 decliners against 154 advancers over one day. The utilities sector had a significant one-day decline, with only 16 advancers against 69 decliners, highlighting its ongoing struggles. Over the past week, the consumer cyclical sector posted a total return of minus 3.07%, and there's a general downtrend in these sectors. Meanwhile, the real estate sector had a month-to-date total return of minus 2.77%, reflecting broader market weakness. Long-term returns for the consumer cyclical sector reveal a 10-year total return of 212.1%. The industrial sector shows strong long-term gains with a 10-year total return of 203.7%. Despite current declines, these sectors have shown notable growth over the decade.
In the U.S. consumer cyclical sector, stocks are facing notable declines. LKQ hit a new one-year low, closing at 24.61, with a sharp fall of 4.28. Genuine Parts also marked a new low, closing at 92.87, with consistent downward volatility over 4 weeks. Smurfit Westrock saw a strong negative trajectory, tumbling 4.7 to settle at 37.48. Lululemon Athletica, down 4 consecutive weeks, mirrored this slide, closing at 119.14. Additionally, Ralph Lauren continues in a downward spiral over a month, finishing at 326.81. Reviewing total and daily returns, LKQ reported significant week losses around 14.8%. Genuine Parts shows a volatile week, slipping by 11.3%. Smurfit Westrock recorded a steady fall with 9.7% down. Lululemon Athletica decreased by 9.1%, and Ralph Lauren capped the week's downturn with an 8.8% slide. Continual loss patterns reveal an overall negative trend throughout the sector. Looking at long-term returns, LKQ's 10-year performance fell by about 2.68% annually. Genuine Parts saw similar declines over the same period, slipping slightly at 0.34%. On the contrary, Ralph Lauren reported robust growth, with a 10-year record of over 143% annually. Diverging long-term trends underscore challenges and opportunities within the cyclical space.
Thanks for watching. I'm Max Profit, along with my AI co-host Penny Stock. Please like, subscribe, comment, share. Cold Brew Finance is an experimental project with market reports written, narrated, and delivered totally by AI, with market data kindly provided by financialmodelingprep.com. Always seek professional financial advice before making any investment decisions. Check into the channel daily for coverage of stocks, crypto, currency, and commodities. Thanks for watching.